2016, we were very proud of our performance across our asset classes. When you look at the diversity of the product lines and how they performed, we did very well in energy, we did extremely well in interest rates, our foreign currencies, our metal complex set new records as well. We really focused on building up our international footprint, and so we saw some extremely good growth across asset classes and client segments, about 15% growth in Europe and comparable levels in Asia, actually closer to I think 18 or 19%. We've worked very hard on the development of liquidity during the regional time zones, and that's not something that happened overnight. The investments that we made in developing liquidity programs have now finally paid off in the context of providing deep liquid markets during both Asian and European hours. And a testament to that was during the election and also Brexit, where in both of those sessions we had traded more volume prior to the U.S. market normal opens than we would trade in a typical trading day, which really goes to the capabilities across asset classes to provide the client base with the liquidity that they need and access at the time that they need. And focusing on making sure that we are delivering product, services, systems, infrastructure that meets the client's demands. This is an area that I can't underscore enough, the importance through our client development and sales team, our business lines, our marketing teams, our communication teams, working in a very coordinated fashion to deliver those results for the customers. Our viewpoint is if the customers are not succeeding, then clearly we're not going to succeed. So it's critical that as we engage that we are providing the products that they need and the services that they need. And an example of that is the work that we've done to help with capital efficiencies. This has been an area of deep concern to our client base, particularly our banking segment, but it also affects the entire ecosystem in terms of the cost of capital and the ability to continue to participate in these markets at the levels that people need to. So it's incumbent on us to come up with capabilities to try to reduce some of those costs for the clients. Part of that is OTC clearing, part of it is services that we offer on a clearing basis, such as compression and compaction. So you can look for more of those elements happening to try to make it more cost effective to do business. Some of those examples are our efforts with repo clearing. Some of those examples are some of the new product introductions that we've recently introduced on the equity side and the interest rate side in terms of monthly, weekly treasury options and equity options. Shortening the duration of some of these instruments based upon requests of the client base to give them, again, alternatives that they can turn to.